This is Kim Ki-hyun from Richgo. So personally, I've been making various investments myself. I really consider them as gurus, and I often refer to the writings and forecasts of people like them. One of them is Warren Buffett, and the other is Howard Marks. But this Howard Marks guy is not someone who makes his outlook so directly like this, but usually, yes. This guy is talking a lot about the possibility of a short-term crash in the US stock market. You might be wondering, why are we suddenly talking about the US stock market on a real estate channel? There might be some questions about that. What I said in these paid prospect lectures and other places was 2024 is very similar to 2007, but 2024 is much more dangerous than 2007. I mentioned this. So, the surprise crisis happened in 2008, and these kinds of things could happen in 2025, right? And I'm looking at the real estate market, and I really believe that the second half of 2025 is going to be very risky. So, what makes me think that, as you all remember, in 2007, people were crazy about real estate? So, where did you go crazy next? People were crazy about Chinese stocks. So at that time, the returns on Chinese funds were so good for several years that there was hardly anyone who hadn't invested in them because the profits from Chinese stocks were just too great. So, even back then, I was crazy about foreign stocks and real estate in Seoul, South Korea. But the US has cut interest rates. In other words, there's a very strong signal that something unusual is happening in the US economy. So looking at 2024, I see that many people are really obsessed with the real estate market, especially in Seoul. And what's the other thing? Another thing is that a lot of people are looking at US stocks very optimistically, almost naively. In any investment, there has to be someone willing to pay more than what I bought it for in order for the price to go up. But too many people are already making profits here and are just cheering and feeling great. So what does that mean? Such a market is losing its sustainability. So the energy in the market is decreasing. Well, then in 2024, the interest rate will be cut again, and it will be exactly the same as in 2007. Okay, so the director is already in a very bad situation, and the US stock market is still okay. But if this US stock market has an abnormal signal, if something comes out around 2025, I think that could be a significant trigger. Given the already precarious and tough economic situation in South Korea, if a recession in the US occurs and US stock prices start to fall, I believe it will have considerable repercussions on South Korea's financial market, exchange rates, and even the real estate market. So, that's why I'm sharing this story today. Warren Buffett is currently sitting on the largest cash reserves in history, preparing for a potential recession. And another very conservative investor, Howard Marks, is even talking about the possibility of a short-term crash in US stocks. Now, let's take a look at the related content. Howard Marks, the famous Wall Street investor who predicted the collapse of the tether bubble, is now taking a detour to his overly optimistic view of the US stock market. So many people are steering away from excessive optimism, so he warned that there is a possibility of a significant drop in the short term. So, according to the date of January 7th, on January 2nd, the investor Mamer emphasized that investors should be cautious about excessive optimism in the US stock market. I'm not definitively saying that the stock market is in a bubble, but there are several warning signs being detected. This person speaks very cautiously, as I've read in their writings. I'm not definitively saying that it's a bubble, but there are various warning signs being detected. So I just pointed out that there is a possibility that there will be a significant decline in the short term, and he added that we could see very low returns in the long term. What does this mean? In the 2000s, the Chinese stock market had a very good growth rate, and from the early to mid-2010s. Up until the early 2020s, the US stock market was doing really well, but the Chinese market was quite the opposite. It wasn't doing well. But what is Howard Marks saying? For a long time, the US stock market could also be in trouble. We could end up with such low returns. He's talking about this right now, and currently the price-to-earnings ratio of the S&P index is at 22 times. This is significantly above the historical average, and he says that a high PE ratio has historically led to low long-term returns. So, he predicted that the average annual return of the S&P 500 over the next 10 years could be around -2%. It is highly likely that it will remain at 2%. So that's what he said. So far, things have been really good, but right now the PE ratio is excessively high. So over the next 10 years, I think we might just break even. With only a slight plus or minus, he's talking about something like this. So he warned that if high valuations are adjusted in a short period of time, a sharp sell-off, similar to the dot-com bubble burst in the early 2000s, could occur. He's saying something like this. The fact that someone who usually doesn't speak in a strong tone is saying this much makes me see it as a pretty strong warning. So this person accurately predicted the dot-com bubble. So, in the case of Howard Marks, it is said that even Warren Buffett always reads Howard Marks's memos. This is the kind of talk coming from a truly legendary investor. So, I see a lot of similarities between the current coin market and the US stock market, and the bubble we saw in Chinese stocks back in 2007. So, while the current bubble might be able to sustain itself a bit longer, in the medium to long term, it could lead to significant pain. So, in 2020 and 2021, we just had a lot of building accidents, land accidents. At that time, it was too evasive and good for a while, but after 22, 23, and 24 years, there was a significant decline. So I think it's time to take a longer-term view of the flow and seriously ask myself whether it's okay for me to invest in the US stock market for the mid to long term, and if, as Howard Marks said, there is a significant correction, like the dot-com bubble in the 2000s, then such after effects will have an even more negative impact on South Korea, and it could have a significant impact on the Korean real estate market. Keep this in mind, and keep an eye on the future direction of the US stock market. If you enjoyed today's content, I would really appreciate it if you could give a thumbs up, subscribe, and leave a comment. Thank you. Thank you